right, if you've got your mind on your money and your money on your mind, well, so do we in today's Health Money Watch. Different watch.
Yeah.
Money Watch. We are tackling taxes. The big deadline is just 5 days away, but you know how the whole system works. Do you?
Some people don't.
Not really. We're joined by CBS News business analyst Jill Schlesinger, who is here to make filing a bit less taxing.
Let me be clear that money always has emotional, healthy reactions and not such healthy reactions.
It's
so the fact, one of the things I want to remind everybody, we're talking about taxes. Calm down. It's not going to be wonky. But I want people to understand it's not that hard. This is really mostly arithmetic, and it's organization, and it's a drag. But you know, the system that we have, our tax system, which dates back to 1913, has 7 distinct brackets.
Okay.
So you know when people will say to you like, oh, I'm in the blank bracket. That's not how it works. We have a progressive system. So your first chunk of money gets 10% applied to it, then 12, then 22, then 24, and goes up. So what that means is at each level, that tax rate applies. And what you also need to know is that generally speaking, this progressive tax means that the last dollars you earn, that's the highest rate you pay, but it doesn't go all the way back. So I think that people don't quite get that. They say, oh, I made a bunch of money at the 22%. No, most of your money was taxed at 0, and then the 10, and then the 12, and then the 22.
Is it by month? I didn't quite catch.
Okay, you pay attention, Mama.
Yeah, okay.
There you go.
All right, you make $80,000, right? The first chunk of money, put that chart up again, guys, so we can look, so I can reference that, please. The first chunk of money, you see that? It says up to $11,600 is 10%. Then the next is 12%. So from 11 to 47,000 or so, that part goes to gets 12% applied.
Oh.
People think that they're in that bracket where it's 22%.
When it's your total.
Right.
It's not.
And so that next bracket, 22%, right? That's where you say, oh, if I made $80,000 as a couple or as a single person, you think you're applied to the whole thing? No, just the last chunk of money from 47 up to 80.
Got it.
This is what is so confusing to people because it doesn't make sense. You think, shouldn't it just be a flat rate? We don't have a flat rate system.
People have advocated for that, but we are not there yet. The other thing that people struggle to understand, Jill, is income. I think people think, well, this is my paycheck, but there are other things that the IRS considers as income.
So we know you have wages. We know you have self-employment income or gig income. We know that people get, say, income from interest from your bank account, dividends, perhaps from your stock or investment accounts. You can also get taxed on a portion of your Social Security benefits and pension benefits. All that totals up to that big fat top line when you're doing your tax returns. Here's my income. Some people also receive income from rental property.
Right.
So, I mean, it all does add up. Sometimes people think it's just this one wage thing, but it does pile on to each other. And each type of income has different rules associated with it. Sometimes your boss will withhold for you. Sometimes you have to withhold for yourself.
All right, Jill, thank you so much for being here right on time because April is Financial Literacy Month. So if you have a money-related question that you'd like Jill to answer, just send an email to askjill@cbs.com, and she could answer it in an upcoming segment.